Hello everyone, my name is Nur Atiqah, and in this video I will be presenting about the accounting of Sukuk. Start off with the definitions of conventional bonds and Islamic bonds, or also known as Sukuk. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental, while Sukuk is a bond that has equal value that represents an individual's ownership interest in a portfolio using Sharia regulations. What's the difference between Sukuk and bonds? First, on the ownership of assets, Sukuk has partial ownerships of the underlying assets that the Sukuk is based on, while bonds is based on the debt obligation between the issuer and the bondholder. Second, on the investment criteria, Sukuk must be Sharia compliant, while bonds, anything can be used so long as it abides to the local laws and regulation. Third, the representation of the issue unit. For Sukuk, it is through the underlying assets, and for bonds, is through the share of debt. For the fourth one, the issue price of the Sukuk is based on market value, while bonds is based on the creditworthiness of the issuer. Fifth, the investment rewards and risk. For Sukuk, the profits are predetermined and the losses are shared, while bonds, the guaranteed and the return is given upon maturity of the bond. And for Sukuk, the effects of cost is related to the underlying assets, while bonds, no cost is exposed to the bondholders on any investments that they have financed. Okay, let's move on to how does Sukuk work. It works when the investors buy Sukuk and become Sukuk holders. They receive a certificate, as you can see here. They receive a certificate from the issuer as evidence of ownership and are entitled to receive periodic profit payments on the principal amount that is invested. Upon maturity, the Sukuk holder will get back the principal amount of investment. There you go. So it also depends on the types of Sukuk that has been applied. So as you can see on your right here, the categories of Sukuk can be categorized into two. You have the asset-based Sukuk and you have the debt-based Sukuk. So the basic features of these two Sukuk, for the asset-based Sukuk, it is based on the performance of the asset which is linked to the investor's payoff, while the debt-based Sukuk, the payoff is linked to the organizer's credit risk. This slide, we will talk about the IOF's Financial Accounting Standard 17, or also known as FAS 17, on Sukuk investment. On the left is the full definition that was taken from the book of Sharia Standards, from the IOF's official book. On your right is basically the breakdown of what the definitions mean. So 2 points I would like to highlight here from the definition is that the real ownership of the asset is from the Sukuk holders, and the issuance procedures must be consistent with the Sharia principles. Okay, so what this FAS 17 does is to differentiate the Islamic accounting practices and conventional practices from within when you record the bonds. The Islamic bonds are classified into three main categories, which is bonds held for trading purposes, for sale, and held for maturity. The issues and proposed solutions. Here, the issues are that the investment classification. The issue is that it is difficult to determine investors' intention. Okay, then there's an imbalance in the financial infrastructure globally. It happens especially to the emerging countries where it's especially weak in them. The Sukuk requires unique Sharia compliance structures, and this causes the institutional rigidity, which in them could risk, and it cannot be removed in the short term. So the proposed solutions on your right, the specific guidelines and measurements to be developed by IOF, and to uniform auditing and income and loss recognition to reduce institutional rigidity. Now that we know about bonds and Sukuk, here are some examples of a type of Sukuk called Green Sukuk. It's a Sharia-compliant bond that invests in the environmental assets, such as renewable energy, and addresses the need for protecting the environment. Features: it is similar to the issuance of non-green Sukuk. Main advantage is that anyone can invest. It has a broader aspect of investors, and it reassures investors that their money is used for specific purpose of assets or ventures, the assets or ventures must be added, and it could help fill the fixed income supply gap for environmental investors. Okay, here's an example of Green Sukuk projects. The first one is the Quantum Solar Park Semenanjung Sendirian Berhad. This project utilizes the Murabahah and Tawaruk principles. So you can see on the right, this is how the structure looks like. And the second one would be PNB Merdeka 118, the one built at near Stadium Merdeka. It is based on the Murabahah and Tawaruk principle as well. So on your right is the structure. Okay. And that's it. That's the end of the video. Thank you.